What's up, gang? Tyler here from Vant Trading, back at it again with another Sunday chart review. Yeah, let's just dive on into it and see what we have going on in the markets. What we expect to come up for this week. First off, pretty light on news events. Monday, nothing really to look out for. Tuesday, again, nothing of note there. Wednesday, you have JOLTS job openings, ISM manufacturing PMI at 10 a.m. on Wednesday. But I don't trade that late anyway, so it doesn't really affect us. Thursday, you have ADP non-farm. Won't get much movement off that, most likely. Do keep in mind, Thursday, you have OPEC meeting. You'll probably get some pretty heavy price action on oil Thursday. OPEC's supposed to be maintaining their supply increase or the production increase. So that's going to probably have some pretty heavy movement on oil. And then last but not least, Friday, keep in mind you have a GBP bank holiday Thursday and Friday, so you'll have lighter volume for the pounds. Friday you have non-farm employment change, unemployment rate at 8:30 a.m. So you do have some pretty heavy price action or I guess news events Thursday and Friday. Hopping into the charts, let's start with pound yen. We're going to start with the weekly chart. Actually, we're going to start with the monthly chart because this is the Tuesday will be the last trading day of the month. So it is pretty important to note we're heading into the end of the month. Looking at the monthly chart on pound yen, it's telling a big story here. So basically what we're seeing here with the pound yen this month is a massive rejection to around the 156 even marks. Let's drop a line where we had pretty much that massive rejection. And if you look at where we dropped that line, it's a pretty heavy area of rejection or a pivot point, so to speak, for pound yen. Look at back in 2013, pretty big pivot point back in 2016 for a few months, found it as support. 2018, you found it as the peak in 2018 for a couple of years. And now 21 to 22 was a major level of resistance. Just broke through it and now retested it, right? So it looks like we're going to have a nice continuation up with the pound yen. Pretty big rejection looking at it this month, and we're now pushing up away from it, closing pretty weak as a bearish candlestick. So what you can expect, right, is most candlesticks, almost all of them have a wick on the top and bottom. So what I'd expect to start the week is a continuation down to give us a little bit of the wick fill, maybe retest 158 area, and then we'll continue back up towards these highs and give us a wick fill up towards 170. So expect an initial liquidity grab to the downside first. But let's hop down to the weekly. Weekly chart, same story. We had the pullback and retest down to this zone around 150, 156, 157 area, and now we have two bullish candlesticks confirming the level of support. The first candlestick is the support being found. The second candlestick is the confirmation. So what I'd expect maybe this week, this upcoming week, is to have one more grab, one more retest of this area where we can have another wick being formed, and then it starts pushing up and flipping bullish, reaching for 168 even, which is the peak up here. So I do expect a continuation. If you draw your Fibonacci retracement in here, we respected and retraced to the 50% mark and that retracement of that breakout. So we should get a continuation up here towards this wick fill, which is the negative 27% retracement as far as the take profit is concerned. So looking at the overall move here, let's hop down to the daily. And we're wedging in here really nicely. Let's draw our wedge. So we are at the upper end of this wedge in here. So that kind of would go with my thesis that the first couple days I'd like to have a pullback to give us that monthly and weekly bottom wick. reject the upper end here, retest around 158 where we saw a lot of rejection in the past, this past week or two, and then find some support there and head back up towards 164, and then following that 168. So looking at the intraday chart, we'll look at the 1 hour in here. We're finding a lot of resistance here. So the way I traded this week is I keep an eye on 160,500, 160,600 area, and then I keep an eye on this counter trend line right here. So if we start breaking through this level of support, 160, and we break this counter trend line, then it looks like we're heading back down to that 158 level that I really want to see us retest before I head back up. So the two levels I'm watching are 160 even and 160,600 as my trade levels. I'll look for longs above 160,600, and then I'll look for sells below 160 even, and then we'll go from there. So yeah, that's what we're going to look at for pound yen for the week, but obviously I will keep creating daily videos moving forward to give you daily analysis if there's anything that changes. Let's take a look at gold. Interesting price action for gold. Take a look at the monthly chart. We do have this nice double top in here. A lot, and I mean a lot, of rejection and liquidity being found at 1950, 2000 area. And now then you saw this that month, the month prior, which was April, had a bearish engulfing rejection of 2000. And then this month of May, we're pushing bearish as well, but we found a lot of support at 1800, which is a pretty decent level of support in the past as well. So looking at this monthly in here, potentially closing week bearish, but what I'd expect is a continuation back down into 1750, 1800 area. So I think that this consolidation point from 2000 down to 1700, we've been sitting in this consolidation since July of 2020, and now it is May of or potentially June of 2022. And so 2-year consolidation, I'd expect us to continue. If we're going to stay with the trend, I'd expect us to continue back down towards 1700. Looking at the weekly chart, one thing to note is this ascending trend line in here of the lows. The ascending trend line of the lows in here. And so we did find some pretty decent support being found the last 2 weeks. But one thing to keep an eye on and keep a note is where are the wicks? Where are the wicks? So where's the liquidity? Where is the support being found on gold? 1869, 1860 area is one area that I would definitely keep an eye on as a level of rejection, which is coincidentally the level of rejection from last week where we pulled away from. And then another level to keep an eye on is going to be this obvious 1800 even psychological level. That's where we have a lot of support being found these last 2 wicks here, a lot of wicks in here, support being found here, you know, all these wicks in here finding support. So 1800 is definitely the level to keep an eye on. So right now we're in between this range in here of 1800 and 1870. But looking at the daily chart, the daily chart tells a different story. Same story, but it tells it in a better picture, in my opinion. So if you take a look at the overall move since April 18th of 2022, we've just been straight declining down to retest this 1800. Found a lot of support at 1800 and moved pretty heavily off of it. So now what I'm keeping an eye on is where is the levels of retracement. So right here, we're sitting at the 61.8, 70% retracement, which is the golden zone of Fibonacci's. And not to mention, it's also where we found some pretty decent level of resistance. You see this double top in here at 1870, and then you find Friday had a big rejection to retest this level of resistance and close week bullish. So I'd expect Sunday into Monday to retest 1870, reject it, and then head back down towards 1800. And then ultimately, if we can close back below this trend line, my view of this trend line is this move here baited people in, stopped people out, ran away, had our Fibonacci retracement, and now we'll continue our direction down to where it should be going. So I like the overall move down for gold. You're finding a lot of rejection in here at the 1870 mark as well, and this is where you find some pretty decent levels of consolidation as well, and that's where we're sitting at now. So I'd expect us to continue down, similar to over here where we retested it and then dumped down to 1800. And then maybe you'll get that move towards the end of the week when we have more heavy US dollar news, like the non-farm, the JOLTS, the OPEC and stuff. So, but just looking at intraday to see where we're going to start for the week. My trading levels are going to be 1850. And looking at 1850, the reason I chose 1850 is it was the most significant level of support in this past week or two of consolidation. A lot of heavy exhaustion wicks in here. A lot of exhaustion wicks in here. Exhaustion wick in here. Level of support and exhaustion in here. Level of support, this is where we had this capitulation in here. And then you level of support in here. So 1850 is also a half number, so psychological. If we break through 1850, I'm looking at sells back down to 1843. And then on the flip side, if we break above 1854, then we could have a nice move back up into this big area of rejection of 1860. And this is where we had a lot of rejection, a lot of wicks in here. So it's a big area of rejection. You have to make sure that where you put your levels is the area where you have a lot of wicks and a lot of rejection, because then you can trust those levels. So 1855, 1854 longs, 1850 shorts. Take profit up in this area, take profit down below here. And then we'll, again, obviously reanalyze it daily. But that's my analysis on gold. And then we'll close it off with oil. Looking at the overall move, let's start with the monthly. Remove drawings. Awesome. So this big month stands out to me, March 1st. So you definitely want to note this wick up in here. And so that wick happened to also reject this 2008 wick in here as well. So this 128.30, very big level to keep an eye on, because it looks like you might want to start reaching for it. This month is closing extremely bullish. Keeping an eye on where it's closing though. If we draw out our level of support and resistance, this level of resistance right here is where we're actually closing above. Potentially, we have 2 days left in the month. And so if you look at the March up, we had this breakout here, broke out, pulled back, and then went, right? And we didn't look back ever since December of 21. We've been grinding straight up. But we still have a little bit of a wick fill to go, in my opinion. I think that this next month will reach for 129.30, potentially 140, which are the highs of 2008. And then we'll look for a mean reversion trade back down. But you'd expect the momentum to go where the momentum is, and that's looking bullish, right? If you look at this overall move in the last few weeks, you're seeing a lot, and I mean a lot, of exhaustion to the downside, a lot of dip buyers, a lot of support being found. You broke out of 95.40, retested it, a lot of support, and now we're pushing up. If you look at the overall weekly in here, we have this wedge that we just broke out of, found support, and now we're closing. We closed a very strong bullish candlestick at these at this area of rejection. So what I'd expect is one last retest of this support at 110, 111 for the weekly liquidity grab, and then we head back up, break the high here, and reach for 128, 129. Daily, same thing. Closed pretty bullish out of this consolidation. Had this 1 wick retest, closed bullish at these wicks. Maybe get one more retest in here, and then push up towards 126. Same story, smaller time frame. Looking at the hourly chart, finding resistance here at 115,300, which is where we found some rejection before, looking at it in the past as well, in March and now in May. So that kind of goes with my thesis that we'll get a weekly pullback, maybe a retest 112, 111. Retest this breakout. Now that we broke these highs, grab liquidity, retested this resistance, we should pull back down to 112, and then we'll get buys off of that to continue up. So that's what I'm looking at for oil. My sell level if we get a close below 114,500. Buy level if we close above 115,500. And then we'll look for a sell down to here. And then on the way up, we'll look for we'll look for this move to 116,500, this previous high in March that we rejected. That's where we'll look for if we look for buys. So those are my levels for oil. That's going to wrap up my my weekly chart review. Got gold, oil, and pound yen. Light on news until the end of the week. Keep in mind, again, pound has bank holidays Thursday, Friday. Looking good for some pretty decent moves this week. So I will see you guys Monday on my chart breakdown. And I hope you had a great weekend. Enjoy Memorial Day weekend Monday. And safe trading.